Hello everyone, thank you very much for joining me for today's daily snapshot. Today we're going to be looking at the S&P 500. It's had a remarkable August and we're going to look how to trade it. But before we do that, please take note of the following important information. CFDs are high-risk products and that you should be fully aware of the risks that they pose. Also, please know that this is a general commentary only and does not constitute investment advice. And lastly, our sources of information. Okay, thank you very much for that. Let's get into it. Now, the S&P 500 is at an all-time high. We know that on Friday, US consumer spending beat the forecast. It came in at 1.9% for July versus 1.5%. But although on face value, that is encouraging, we must acknowledge that it may be pent-up demand following the lockdown period. Now, liquidity aside, clearly, demand is still needed to fuel the economy going forward. In this regard, fiscal stimulus news is uncertain, with the Republicans and the Democrats making little progress regarding the corona relief package. There is widespread disagreement in this regard. Let's take a look at the technicals. Here is our S&P 500 on a daily basis. You can see that it's moving in that northeasterly direction, a really strong trend here. It's above its 20-day simple moving average, and the 20-day simple moving average is also moving upwards. However, I want to draw your attention to the RSI. You can see here that the RSI is well overbought, okay? And that's on a daily basis. Now, if I have to change the time frame here to the weekly basis, you'll see that our RSI is still overbought. So we do have some froth on the S&P 500. Take a look at this chart, and you can see that the S&P 500 has been moving in a northeasterly direction at the same time that the US dollar has been moving in that southeasterly direction. That's indicative of the support that the US dollar liquidity injection has been given to the risk markets. Now, if we go back to our weekly chart and we change the instrument from S&P 500 to the US dollar, you'll see that we also slightly extreme here, slightly frothy. We've got an oversold position. So oversold on the US dollar, overbought on the S&P 500 at a time when the markets are quite closely correlated, but on a negative basis. Okay, quite closely correlated on that negative basis. Let's end off with some key takeaways here. Okay, we know that the S&P 500 is at an all-time high. However, virus relief stimulus talks are deadlocked. Fiscal policy is targeted, and it's needed to promote demand going forward and ensure that stimulus is benefiting the real economy. Liquidity is at the very least still supportive on the financial sides, although we can debate how much of it is moving into the real economy. Given that the liquidity is still supportive, any pullback on the S&P 500 is likely to be compelling. If you enjoyed this snapshot, please consider subscribing. Click on the subscribe button below. Thank you very much for joining me, and I do look forward to speaking with you again in the future.